Welcome back everybody. I'm really excited about today's video because I will present you one of the best mining company that I've seen, and actually I'm invested in it, and I will tell you why I think that it has a lot of room to go. And even though its price has increased significantly, I think it is still really undervalued. I will tell you something about their management, I will comment their projects, I will comment their past acquisitions, where are they going. We will go through all the numbers, we will check the balance sheet, and I will give you my forecast about their gold production and how much cash flow are they going to generate. But before we go on, as always, I will give you a fast overview of my portfolio. As you can see, market value of my portfolio is around $41,000. It has increased significantly since the last video, but the main cause of that is that I have actually transferred 900 euros to this account. What I did with it is I actually bought 20 stocks of Alibaba. You maybe remember that I sold my Alibaba shares several weeks ago, but since then they have depreciated almost 10% in euros. So I actually bought them again because JD.com, another China's tech giant in e-commerce sector, actually reported very nice earnings for second quarter, and Alibaba is reporting tomorrow, I think, so I expect nothing less from Alibaba, so yeah. And as soon after I bought them, they actually went up several percentage points, so I have already gained some return on them. But if you check my performance compared to S&P 500, you can see that in the last 2 weeks S&P 500 actually outperformed my portfolio. But I'm still leading by almost 20%, and I'm extremely happy with this year's performance. Now we are coming to the Equinox Gold Corporation. So just to give you fast overview of their second quarter results, the company reported last weeks and they have produced 127,000 ounces despite their Los Filios mine not working in most part of the Q2 because of the coronavirus issues. And remember, that is their biggest mine. So all-in sustaining cost came low at around $900 per ounce, and consequently, of course, they generated robust earnings from mine operations of $85 million. They also have 6 active and 4 mines in development, and my personal opinion is, and if you read between the lines of management's comments, they will be producing 1 million ounces per gold per year in about 2.5 years. So they also have rock solid balance sheet, and because of the high earnings, I will also be showing you some interesting comments from management about what are they going to do with the excess cash they are generating. Equinox Gold was also added to GDX ETF and S&P TSX Global Gold Indexes, which will bring them to the radar of investors and perhaps unlock their true value. So despite challenges in the quarter, the company managed to post stellar results. So if you add to that rate at which they are organically growing, remember organically, how efficient management is with allocating capital, great balance sheet, and proven and probably gold reserves of over 12 million ounces, as well as measured and indicated resources of 22 million ounces, you have really perfect bullish storm. But let's start from the beginning. So if you check their management, you can see that they have CEO Christian Milau, President Greg Smith, and CEO Atier Rowe. These veterans of mining industry proved themselves throughout history, which is well recorded, because they've been in management of several, if not dozen, gold mining companies, and all of those gave investors really nice returns. So not only that they were involved in many projects which earned their shareholders a high return on their investment, but insiders of Equinox Gold own 8.5% of the company. So investors can rest assured that management is motivated to grow shareholder value. What I also love to see is that even after market capitalization of the company has increased significantly, management is still standing on the ground with both feet, and they are not forcing any mergers and acquisitions, but they are focusing on organic growth. And of course they have plenty of space to develop mines and to reach that high rates of organic growth. You could also hear them speaking about one of their prior acquisitions, Mesquite mine. They said that, I quote, "Remember, this mine was acquired for $158 million in 2018 when gold was 1,200 per ounce, and with another 3 years mine life. And we now have been mining for almost 2 years and we still have almost a 3-year mine life." So they are only entering deals like this one, where they have a good margin of safety, and they did a lot of those in prior years. Now, of course, when we have higher gold prices, their focus is switching from mergers and acquisitions to developing mine operations and the extraction of gold, of course. So another thing I love to hear is when they speak about balance sheet, it is like a holy grail to them, and they avoid playing with it. This is not the first time they are showing how reluctant they are to leveraging it. Same happened during the last conference call. They said that, so in terms of our cash flow, now as I said, we probably have operating cash flow at these kinds of gold prices, where we are going to be funding our growth profile from operating cash flow rather than needing to use our balance sheet. This is simply music for my ears. They are being really rational with how are they allocating their cash. Before I show you their mine portfolio and their 4 projects which are in development, I would just like to ask you kindly if you think these videos have value in themselves and if they are helping you to make your decision and about buying some stock, to subscribe to my YouTube channel. I would really appreciate it and thank you in advance. So after years of mergers and acquisitions, Equinox Gold is now sitting on proven gold reserves of 12 million ounces, as well as measured and indicated resources of 22 million ounces. So all of these resources are lying under 10 mines. In addition to operating 6 mines throughout the USA, Mexico and Brazil, the company also has 4 projects in development, which will push gold production to 1 million ounces per year. So they have Castle Mountain Phase 1, which is mostly completed, and the first gold pour is expected to happen in the last quarter of this year. They also have Castle Mountain Phase 2. Actually, they're on a track for completion feasibility study and reviewing potential to expand production to 200,000 gold ounces per year. Then we have Los Filos expansion. Here is what management said about this mine. Despite the temporary suspension, actually some very exciting stuff has been happening at Los Filos, behind the scenes. This is a project producing on every 200,000 ounces per year, but we really do see the potential of 350,000 plus ounces in our near future here. So remember, this company will produce around 500,000 to 550,000 gold ounces, and in the future, only Los Filos mine could be producing over 350,000 gold ounces per year. So I've been listening about this for some time and they deliver everything they promise. So when they say that they see the potential, you can bet they have a lot of proof for that statement. And then as a 4th project we have Santa Luz. Permits are ready and early works are underway, and this mine will be producing around 100,000 ounces of gold annually. And they are also expanding Arizona, Mesquite and Fazenda mines. So those mines are already producing gold, but they are working on expanding them. Perhaps the most important thing is that all of these projects are already fully funded. And there is no need for any new debt. So taking everything into consideration, this is how their projection looks like. You can see that it is about 1 million gold ounces. Now we came perhaps to the most interesting part of this video, valuation. So even 3 out of their 6 mines were closed for some time in Q2 because of the COVID-19. They managed to deliver record results with average all-in sustaining cost of $900 per ounce, 85 million in earnings from mine operations and adjusted net income of $27 million. So of course low fuel price and favorable foreign exchange helped with pushing AISC down. But even those will partially disappear in Q3, I expect AISC to stay below $1,000. They have also almost 500 million of cash and little more than 700 million of debt, including 252 million of convertible notes. So they are forecasting roughly 20% annual growth rate in gold production. But again, if you've been following them, they love to give lower guidance, and my projections say that they will hit 1 million ounces of gold production by 2023. So from valuation perspective, this company will be producing around 700 to 750,000 ounces of gold next year, and they are trading at this moment at 0.8 times price to net asset value. Their peers are all trading above 1 and some even above 1.5 price to net asset value, and if Equinox Gold would trade on the same level, its price should be between $18 and $28. Another interesting thing they mentioned, it was new to me, is dividend. So they said, so one of our plans is here in the next 5 weeks is actually probably to repay $200 million on revolving credit facility to pay that down. And then I think secondarily, we are just starting the budget process here and we have to entertain the thought of dividend. I've had a few people ask about share buyback, but certainly a dividend or share buyback for next year. Again, you can see their plan is to strengthen additional balance sheet, and they are not rushing into any mergers or acquisitions, even they have a lot of room for leverage and cash on the hands. Margins were around $800 per ounce in second quarter, when their realized gold price was a little bit above $1,700 per gold ounce. In the second half of the year, they will produce over 300,000 ounces of gold, and if the price of the gold stays around 1900, so I'm not assuming it will go above 1900, and even if their AISC grows a little bit, their margins will grow to around $950 per ounce of gold. If we translate that into earnings from mine operations, they will hit over 250 million only in the second part of this year. This means that they will be flooded with cash, and I cannot imagine this stock will be trading at $13 range as it is trading now. If, or maybe better to say when, we are speaking about this kind of management, when they hit that level of production of 1 million ounces, earnings from mine operations will hit $1 billion annually. Of course, it mostly depends on the price of the gold, but as it seems the macro situation is extremely bullish for the price of the gold, and I don't see it staying under $2,000 per ounce for a very long. I don't believe that investors understand the impact of higher gold prices, and 20-25% annual growth in gold production will have on the cash flow generating of this company. I really don't think that investors understand this perfect bullish storm that is happening in this company. So that is why I am confident Equinox Gold won't stay at the bottom of this chart for too long, but will be in the company of big guys. That is why I am still invested in this stock. I own 400 shares, even though I bought them at around $8 per stock. I will not be selling them so easily, because I really feel that they have a lot of room to go. Let me know what do you think about this stock, if you maybe plan to buy it. Please, if you do your own homework, because I'm not a professional analyst, this is only for the purpose of entertainment. Thank you for watching, have a nice day and see you next time.